Now let's move on to another exciting panel session. We'll hear from global VCs on key venture investment hotspots in ASEAN, the Middle East, and China, exploring market dynamics, tech innovations, and growth strategies for startups. And now, first of all, please welcome on stage our moderator, Mr. Peter Chan, Technology, Media, and Entertainment and Telecommunications Assurance Leader, Ernst & Young Hong Kong. Let's welcome Peter. Joining Peter on the panel, we have Mr. Gerald Yeung, CEO, LUN Partners Asset Management Hong Kong. We also have Mr. Simon Sharp, Partner Global Ventures. Let's welcome Simon. Next, we have Mr. Patrick Yip, Founding Partner Intudo Ventures. And we also have Mr. William Baobin, Managing General Partner, Orbit Startups. Welcome, everyone. Well, gentlemen, please be seated. And now I'll pass the floor over to Peter.
Okay. I seems the first panel is very interesting. So this one hopefully is more interesting than ever because the topics of this is about hotspots as picked by Southport. So we have a representative who is going to cover hotspots, of course, China, ASEAN, and also the Middle East. So first of all, introduction, I'm Peter Chan. I'm from EY Hong Kong. I'm the TMT, Technology, Media, Entertainment, and Telecom Assurance Leader of EY Hong Kong. I'm glad to be the moderator today. So with me, first of all, is William Bao, the Managing Directors of Orbit Startups. And it is, in fact, the first and longest running startup program in Asia. And also, he is also a venture partner as SOSV, the number 4 most active venture capital investors in the world, and number 5 Asia and rest of the world, according to TechCrunch in 2021. Thank you, William. And then another one is Simon Sharp. He is the partner at Global Ventures, a venture capital fund based in UAE, investing in across the Middle East and Africa. And Global Ventures is sector agnostic, and they are the third. They are raising the third fund, and they have altogether 400 million AMU and 16 plus portfolio companies, and focus on Series A companies. And then thirdly is Patrick Yip, founders of Intudo Ventures. Patrick is the founding partners of Intudo Ventures, an Indonesian-only venture capital firm founded in 2017. And last but not least, Gerald Yeung. He is the CEO of LUN Partners, an Asia-based PVC firm headquarters in Shanghai and mainly investing in fintech investments. And its commission is to assist Chinese company to grow abroad as well as import a successful business model into China. So thank you. So without further ado, I have only prepared 2 questions for today's discussion. So hopefully there would be a lot of interactions with the panelists, and some of them are quite interesting indeed. My first question is, what are the key market dynamics and investment climate that make China, ASEAN, and Middle East the proper destination for venture investments? And given we are in Southport, I would also like to ask, how attractive are those markets to startup companies, in particular in Hong Kong, and what kind of ecosystem are there? So why don't I start with William? William, could you share with me a little bit about your perspective, especially from I know you have a different exposure, so both from the ASEAN as well, also a little bit from the Middle East perspective.
Yeah, sure. So I started investing in China 2002, 2003. The total market cap of the tech market at that point was about 1.5 billion. And when I stopped investing in China 2018, it was around 3.5 trillion. So we saw a massive tech-driven economic transformation. So for Orbit, we stopped investing in China, but we're investing in emerging markets around the world. and plus the Middle East. We're taking a lot of these China-inspired models to local founders, market by market. Southeast Asia, mostly the big markets. It went into India, Pakistan, Bangladesh, now Africa, LATAM. So we see a huge opportunity. It's not sort of copy and paste. In the old China days, used to copy and paste US to China. It's not exactly copy and paste China to the rest of the world, but a lot of the challenges that these emerging markets or markets all around the world have are very similar to the problems that have already been solved in China and to some extent in India. So you can take inspiration and learnings from all the scar tissue in China and bring that to local founders around the world. So that's what we're focused on. We're still quite active in Hong Kong. The last time I checked, I think we were number 3 most active VC in Hong Kong over there the last 48 months. And the goal here is how do you grow up, not just in the Hong Kong market, but then go cross-border. So for example, one of our companies here, VACT, I think we're the first VC, but we invested in them here. They do AI-driven analysis of CCTV for construction sites. So we call it like boring stuff that makes money, right? So started by making construction sites safe here in Hong Kong more efficient, then across Asia. And the key thing is we assisted them to help enter the Middle East market, where in Saudi Arabia, they've already signed NEOM and Aramco. So born here, go regional, then global.
Wow, amazing. Could I have a follow-up questions? I know ASEAN is of course cover a lot of countries, and of course Patrick, one of the panelists, is quite focused in Indonesia. But how could you share with us how do you see different countries within ASEAN? Or maybe starting with Patrick.
Yeah, sure. Thanks, Peter. Hi everyone. My name is Patrick. I was born and raised in Hong Kong, so it's good to be back here. I moved to Indonesia in 2005 and has been investing there since then. I think the venture ecosystem in Indonesia really started around 2010 or 2012, where I think some of the biggest unicorns from Indonesia, like a Gojek or Tokopedia, Bukalapak, all these companies, were still very, very nascent. I felt very fortunate to have that front row seat, to witness a lot of this growth. The GDP of Indonesia, when I first moved back, 200 billion, nothing to call home about. Today it's 1.4 trillion, so 7 times growth since then. And obviously with that economic growth, there's a lot of digitalization or digital transformation of old line industries that comes along with that. So at Intudo, we tend to focus a little bit more on B2B businesses, helping a lot of these third generation family businesses in Indonesia with digital transformation processes in some parts of their value chain, whether you make instant noodles, you make your property business, hospital operator. There's some parts of the value chain that deserves or to be enabled with technology, and that has been our thesis since the beginning.
Okay, thank you. And Simon, I know your expertise and a lot of investment is in Middle East. Of course, I would like to share with us a little bit about, because Middle East to a lot of people is, of course, very rich people, a lot of money, very amazing infrastructures. But in terms of the startup ecosystem, how do you see the VC investment climate? And also touch on a little bit about the, is that a good place for startup to expand to this market? Can you share with us?
Happy to, and thanks, Peter. So I think we heard in the keynote a couple of people mention around the bridge between this part of the world and the Middle East, as well as other parts. William is someone that's taken companies there, and so hopefully today I can represent a bit of Middle East and Africa, which is where we largely invest. So to start with, really, I just wanted to touch on the macros. There's a lot of similarities between ASEAN, actually, from the Jungle Ventures keynote this morning for anyone that was here. So just some high-level numbers. There's around 2 billion people in the Middle East, Africa. From a demographic perspective, around 65% of the population is below the age of 35. So what that results in is a huge number of people that have higher digital adoption, mobile and internet penetration rate. So as a founder building a company, you've got the perfect demographic there to lean into. So that's one big element of it. There's the geographic location of the region. It's 6-7 hours to where we sit today, and the same in the other direction towards Europe. So as you're a founder scaling a company, if lots of founders move to that region, but can quickly move either way as they need to as well. From a funding perspective, and I guess that's what most founders care about, and that's what helps really grow the ecosystem. 6 or 7 years ago, there was only about $300 million US dollars of funding in the tech ecosystem in the Middle East and North Africa. That's grown over the last 6 or 7 years to about $3 billion. So that's sort of 10 times growth, which is a big number. But at the end of the day, when we compare that to West Coast America, it could be 1 or 2 deals. So we've seen huge growth, but there's still a long way to go to get to where we need to. And part of the question was around why do founders want to come to the region. I think all of those macro things are a big part of it. I think having the right talent in the region is a huge thing as well. I think, again, that was a topic of discussion 4 to 5 years ago around attracting the right engineers and developers and having that support around a founder trying to build the right tech. And now that's starting to be there. It's definitely an area of interest. And then lastly, I think it's initiatives such as Cyberport, where we are today, that exist in the Middle East, that they exist in the UAE, in Abu Dhabi and Dubai and in Saudi. They really foster this innovation from the ground up, and they encourage founders to want to move to the region where they can move fast and scale fast, and legislation allows them to do that. So I think it's a combination of macro plus funding plus the ability to move fast.
Okay, thank you. Last but not least, Gerald, I would like you to share basically your presence in China. And in fact, I think your interest is also helping Chinese company to expand abroad, as well as to bring in interesting business model to China. And also, I think you'd like to share with us some of your portfolio companies. Could you share with us?
Yeah, sure. Thank you, Peter. For the China market, our stance is pretty simple. We are long China. And the reason is also pretty simple, because China has the biggest market with the largest population in the world. And equally important, we think, is also rapid iteration. And what I meant by rapid iteration is, for example, the iPhone, it usually takes about 1 year's time, to go from iPhone 15 to 16 or 16 to 17. But for a Chinese company, Xiaomi, they may be able to, roll out a newer model within a few months' time. So, that's the speed, with the difference between the Chinese market and the Western market. And China, it has a lot of manufacturing infrastructure and expertise, and it's also very strong in the full spectrum of the supply chain. So, what we think is most important to success for Chinese company going forward is globalization. They have to go overseas to gain more market, gain more business. And for example, one of our portfolio company is a technology company based in GBA. And it produces a general purpose chip that is used in SIM card, bank card, ID, and also passport. It is a highly successful company because over 85% of its business and revenues are coming from the overseas market. And currently, it has 6 manufacturing sites and 13 sales centers globally, and also it is servicing over 150 customers in over 150 countries and regions. And just recently, we are working with this company, to try to gain a footprint in an ASEAN country. So what we're going to do is we're going to acquire a well-established local company, which is also a listed company, and this company manufactures digitalized passport. And as you can appreciate, this is a highly regulated and specialized business. And so it requires a lot of licenses and also track records. And for a portfolio company, to build it up organically is pretty difficult. But via a M&A deal, in this case, you can enter the market more easily, you can start the operation quickly, and you can also have existing clients. And on the other hand, the M&A target company will also benefit, from our portfolio company, through its expertise in the supply chain in China and also a global sales force. So it's a win-win situation.
Okay, thank you. Then I would like to jump into the second questions. I would like to talk to the panelists. Can we discuss some of the most exciting sectors, technology innovations, and trend emerging from these regions? And then also I'd like to ask how startup companies, including those in Hong Kong, could tap into this kind of new trends and development and expand their footprint into these exciting markets. Starting again with William, I just noticed that you just recently returned from, you come from Dubai, right? You just have attended a very amazing conference. I would like you to share a little bit, and also I would like to in particular hear you bring 35 companies from Hong Kong to the Middle East to expand, to explore whether they could generate some revenue. So that would be very interesting matters that I think our audience want to hear.
Yeah, sure. So I think for us, we invest, but our value add is focused on bringing money to our portfolio. So there's three types of money. Probably the worst for an early stage startup is debt. Actually, a number of our companies have choked on it and died because they don't know how to properly manage it. So we do try and help them with that. The second one is investment, which is dilutive. So I worked on the Alibaba IPO when I was an analyst at Deutsche Bank here in Hong Kong, 05, 06. And the only thing that Jat Ma was really pissed about was the fact that he and the team took 95% dilution from investors before they went IPO. It worked out okay for him in the end, but it took a lot of dilution. So we really focused through our lifetime support program on driving sales, driving revenue. We have a 10-person enterprise sales team in our team. And the thing about the Middle East, I've never actually been there. 2020, one of our companies in Pakistan got sales to help delivery enable supermarkets when COVID hit, because they didn't have the ability to actually do a food delivery, but people still needed to eat. So the supermarkets were like closing, but people needed to eat. So they got revenue without even going to the region. It was a tough time, and actually kept the company alive. And now the CEO is based in Saudi. About a third of their revenue is from the Middle East market. And so we hired a guy and started mapping out the market. And for UAE, very much focused on corporates and multinationals. For Saudi, we're very much focused on the government, because the government acts a lot like a corporate, at least us from the outside looking in, it seems that way. And we're trying to help our companies crack into the market without having to spend a huge amount of money up front, right? And then now that we're sort of there, we started investing in some local companies. But for the most part, we've been focused on what we call like cross-border technology innovation arbitrage, bringing solutions, best of the best from around the world into a market like the Middle East. And so I think it's a huge opportunity. We're also looking at some emerging markets. So if you look at a place like Pakistan, so we were talking about Indonesia was 200 bill, and then it's over $1 trillion now. Pakistan's, even after 3 devaluations where the currency is down 75%, it's still flat around 300 billion a year. Now it's super fragmented, a couple 100 million people. But we think there's this opportunity to drive this 7x, similar type of 7x opportunity. Because remember, back in 2002, 2003, China was only a $600 billion consumer market. And it grew, obviously, significantly over 10x. So we think that's a huge opportunity, and that's what we're focused on.
Okay, I have one more question for you. The last panel talked about pivoting. And but for you, in particular, bringing some startup to, for example, ASEAN or Middle East, I think the more appropriate term is adaptation. Because once you expand to more than one market, you have to kind of adapt to particular situations. Could you share with us, is it a lot of adaptation required, for example, like start from Hong Kong to go there?
Yeah, definitely. If you think about taking a model that everybody knows and loves from China, say like an Alibaba type model, digitizing micro SME mom and pop shops. You can't just take something that works here and pop it into Pakistan, because Pakistan is like here a long time ago when people use cash, and it's cash on delivery. So a lot of people don't remember, in the 2000s, China was all cash on delivery. So you're taking a lot of those lessons, not from today, but from yesterday and the day before yesterday into these other markets. So from an enterprise sales perspective, you don't have to change things too much. But if you're talking 2C or business to consumer, you do have to do things a bit differently. And then the last thing is, a lot of people try and traditionally the US way is you sell software. You have software and you charge for it. Well, in China, people have a long history of not paying for software. So one of our challenges is, okay, how do you use software to solve a problem but still make money? And a lot of times we're borrowing business models and monetization models. That's why everything is a fintech, because we're using software to solve a problem, but we're actually monetizing generally through some sort of financial service or trade credit or factoring or accounts receivable financing or buy now, pay later or whatever. Okay. So it's you just have to learn and then localize it a bit. You can't just copy paste.
Okay, thank you. And then for Patrick, I have two interesting questions to ask you. First of all, I think you have quite emphasized you are Indonesia only funds. So what particular aspect, why Indonesia only? And then the second thing is also touched on by William. It seems you focus more in investing companies which are B2B and not B2C, because to a lot of people, Indonesia is a big, huge populated country. Why not B2C, but why B2B?
Sure. No, thanks, Peter. So I think on the first question, no, I think Indonesia only. We feel that Indonesia is one of the most important markets in Southeast Asia. So we are just trying to position ourselves in the Indonesian market and capture the opportunity set early. And as these companies scale, obviously they expand outside the borders. But I think for us, we want to capture these Indonesian opportunities at early stage with the network that we've built. So hence the Indonesia only. So I think Southeast Asia has birthed about 53 unicorns. I know the word unicorn these days may not mean so much, because so much of the value is driven by how much cash the company has raised, right? But out of the 50 or so companies, Indonesia has 15 of them. But what's interesting is from the 15 unicorns in Indonesia, 13 out of the 15 actually became a unicorn just within Indonesia first, right? Like Gojek, Tokopedia, before they expanded outside, right? So they became billion-dollar businesses just staying in Indonesia. So we feel that the Indonesia opportunity set, the Indonesia market is vast enough, and hence our Indonesia-only thesis, right? Now, as we look at the opportunity set, we, again, because we're very, very specific, just Indonesia, so sector-wise, we're a little bit agnostic. So we tend to look at more moat-driven businesses, whether it's moat in terms of regulation. So that's why we like fintech. One of our company called Zendit, which is one of the more valuable fintech companies. Think of them as Stripe of Southeast Asia, right? That was built in Indonesia before expanding into Philippines, Malaysia, and then now Thailand, right? We like education businesses, we like healthcare businesses. These are all very moat-heavy businesses where it doesn't travel well outside the country. So because of some of the relationships that we have in Indonesia, we like these businesses because of that moat, right? And answering your second question, B2B. So because we have over 40 or so Indonesian families as our LPs, a lot of them are going through digital transformation. And obviously this has been enhanced because of COVID, where a lot of these, as I mentioned earlier, these third generation, they realize that they need to digitally transform some parts of their value chain. And because we have them as our LPs, we work with them through this process, and hence many of our companies end up to be solution providers or product providers to a lot of our LPs in Indonesia because of this trend, and hence our and we feel our advantage is doing B2B. And then the last but not least, I think Simon, you spoke of talent a little bit. So I think talent-wise, same thing, right? We look at talent moat as well. So we have a two-pronged strategy in getting Indonesians back into our country. So first of all, we have this Sea Turtle program. In Mandarin, it's called 海龟, right? So the first generation of any ecosystem, whether it's China with Neil Shen, etc., all returnees, right? So these are for us in the case of 海龟, so 印尼海龟. So the 印尼海龟 would be Indonesians that study in the US, UK, Australia. They come back and be the first generation of tech founders, right? But now I feel like in the tech ecosystem, we're seeing that second generation, which is the local graduates, which is called 本土派, right? So the 本土派, they're coming up to be, talent. So that's why we feel that talent is definitely more dispersed. So we look for investments based on these three modes.
Okay, thank you. Then come to Simon. Simon, I would like you to share a little bit because I saw some of your investment also focused quite a bit on AI and also using AI in fintech. Fintech in particular, I look at one of the country investees is kind of linking agriculture to using fintech for settlement and payment. So could you share with us some of your aspect about on this area in particular about the innovation aspect?
Happy to. So we're sector agnostic, which is why our portfolio is so diverse in terms of that. And I think if we go back again to 5 or 6 years, we lent into fintech as part of our first fund. That was because, I think to William's point, the economy was very cash-based. There's been a huge shift over the last couple of years, and I think there's an element to say that every company is a fintech company to one extent because they involve in cash and transactions. But we saw that take place, that sort of wave 3-4 years ago, everything from B2C consumer investing to OpenAI to infrastructure plays across the Middle East. Again, we break down the Middle East, Africa into sort of 3 pockets: GCC, UAE, Saudi Arabia. That's where probably most of our capital's been deployed. Then North Africa, Levant, Egypt, Jordan, countries like that. And then in sub-Saharan Africa, where we focus, Nigeria and Kenya. Each one of these markets, very different in terms of how we look and where we would like to invest. You mentioned, I mean, sector agnostic. We're bullish about every sector, to be honest. I think fintech and e-commerce have attracted the most funding over the last few years. As we've seen that shift, as I said, on the fintech side, and then on the e-commerce side, there was a big shift through COVID with these mum and pop shops, as well as others just moving everything to online, forced to, but now seeing the benefit and the access they can get and how they can scale outside of the country or the cities that they were in before. So they were 2 heavily invested sectors. Ones we're really interested at the moment, you mentioned agri-tech. We're a thesis-driven firm as well, so we like to look at the macros and really what's driving behaviour, why are founders building what they're building. Agri-tech was interesting to us because of a number of different factors. There's the obvious around global population, the typical demand supply that exists there, but also things like geopolitical uncertainty, localization, COVID highlighted that, and food security was at the top of the agenda for a lot of governments. And so with that comes favourable legislation towards companies and a drive from government to correct these. And so you start to see a wave of founders starting to build into that space. An example you gave was actually a controlled environmental agriculture company out of Saudi Arabia, out of the King Abdullah University of Science and Technology, that expanded since we invested 4 years ago into the UAE, but then has now expanded out into Europe and out into the US as well. So it definitely goes back to the theme where we're talking around, where it's definitely the ability to cross borders is much more seamless than it ever was before. Yes, absolutely, there's nuances, but we definitely see technologies locally which can scale and do scale outside the region. Then the last point around AI, it was touched on earlier. I don't think we receive a pitch deck now that's not got AI in there somewhere, which you kind of expect. But then for us, it's to differentiate, what does that actually mean? What is the moat in any particular case? Is it the data? Is it the way in which they operate? Are they using third-party software? Is it built from the ground up? One other interesting thing is, there's 400 million Arabic-speaking people. Only less than 1% of global website pages are in Arabic. So when you just look at the starting base in terms of data to train the models that exist, it doesn't compare to other languages. So there's a lot of work that's happening in that space as well that's interesting.
Okay, very interesting. Thank you. And then lastly, Gerald, could you share with me a little bit about, again, on the innovation aspect, particular trends in China, and also I'm personally also interested in AI, also any particular AI development you think you could share with us?
Yeah, sure. AI is the hottest, and the most talked about, sector in anything right now, not just VC, PE, but just everything. But AI, besides, we need advanced technology like, provided by companies like NVIDIA. It also requires massive data, before AI can be applied. So companies like, Pinduoduo and JD.com in the Chinese e-commerce industry, they have collected over 10 years of trading data, which enable them, to digitalize the supply chain in most of the aspect of the supply chain processes. So what we think the key going forward for Chinese company is how to apply the AI, solution to the traditional, industry to help these companies to become more efficient and more competitive. And I can use, and also for the sector, the sector that we are most, interested in right now is digitalization. And more specifically, digitalization of the B2B, B2B sector, and which is what Patrick already, gave an explanation why B2B over B2C. So I'm going to give you a quick example, to illustrate, my point. A beverage company, Chaji, the Chinese name is Ba Wang Chaji, which I think most people, who visit China would see their stores. It is the most, popular instant drinks brand in China right now. And actually, it just opened its first store in Hong Kong, I think last month in TST. And Chaji, currently has over 4,500 stores in China and over 100 stores in Singapore, Thailand, and Malaysia. And it serves over 100 million, cups of drinks, annually, to in all the markets. But what what I want to talk about is not, this company, but rather, is the supply chain AI digitalized platform that helps Chaji, to grow and grow rapidly. And this behind the scene company is a Shanghai-based SaaS company, and it actually provides the supply chain AI digitalized platform to help Chaji, to grow its business. And basically, this software also, have a lot of AI digitalized solution like supply chain settlement, tax reporting, tax analysis, and also digitalized invoicing. So Chaji, use this AI solution to help it, to grow faster, to grow easier, and also cheaper. What, Chaji used to, spend 3 to 4 months, to build up a supply chain in a new market. And with this solution, it can be done, in 1 to 2 weeks. And also for the procurement, for the payment, for the invoicing, it used to take Chaji like 40 to 50 people to handle this, in multiple locations. But now it can be done by 4 to 5 people in the headquarters. Yeah, so this is a very amazing transformation of what supply chain can help, a company in China.
Okay, thank you, Gerald. I think a few seconds. I would like to, at first I want to have a closing remark, but only one thing. I just want to share with all of you an amazing E&Y recent report, economic report. We talk about a lot about AI. Based on our study from EY, we kind of think the generative AI revolutions could in the upcoming decades and more than 2 years to help to grow the GDP of respective countries. And in fact, we kind of predict the kind of GDP we are talking about is the size of the economy of India in a decade. And also, we're talking about, Middle East, right? They also expect Middle East have a significant boost of the GDP solely because of generative AI revolutions. Depending on whether it's conservative adoptions or widespread adoptions, we kind of develop a model. I sort of think they also use AI. Could boost the GDP by a low end of 0.6% to up to 1.1%. So they're a very sophisticated model to maybe also help Hong Kong to see Southport, if they that generative AI, how much percentage contributions to GDP we can afford in Hong Kong. So I still have a few seconds. Is it overrun or okay? Okay. Okay, maybe last one question. I first initially planned this one. Could each of us give you one word that maybe for the staff in Hong Kong, what they should be avoid when they expand business, starting from China?
One word, maybe 2 words, not being globalized.
Okay.
Not being too rigid.
Okay.
Not do too many things. Sorry, I know that's a few words. Yeah,
Okay,
don't do too many things.
That's
Yeah.
okay. Last is
Revolution.
revolution. Okay, not to be too revolution. Wow. Okay.
What? Oh, not to be too
yeah,
revolution?
yeah. To
Okay.
avoid.
Avoid. Oh, I think, again, not to be too rigid, not to be too staid. So you need to drive a revolution.
Okay. Okay. Thank you for our panelists for the very amazing sharing. Thank you.